Hi everyone, this is Alejandro Cremades, and today we're going to be talking about how to present the amount to raise in a pitch deck. So before we get started, make sure that you hit that subscribe button, and this way you will never miss out on any of the videos that we roll out every week. So understanding how you're positioning, packaging the money that you're going out to market, that money that you're going to be asking investors for during your fundraising efforts is absolutely critical. That packaging, that position is going to make all the difference. So in today's video, we're going to be breaking it down to you, give you all the step-by-step, all the insights so that you really know how to nail it. So with that being said, let's get into it. So figuring out the amount to raise is absolutely necessary because that is, in essence, the amount that is going to give an understanding to the investor on how you're thinking about things, where you're planning on deploying the capital, and so forth. So really the different areas that you need to keep into consideration when you're thinking about runway are the following. Reaching the next milestone, the runway, hiring, comps, and a cushion. So ultimately, when it comes to the runway, you need to know that the runway is the amount of time that you have left before your startup crashes, meaning that there's no more money. So here typically is 18 to 24 months, and this essentially is money that you need to count in without the actual revenues. So just pure cash burn that goes into some of the costs of really being up and running. So what you want to do is, even though people say to raise for 18 to 24 months, you don't know how the market is going to react over the course of time. You don't know some of the unexpected expenses that you're going to have to face. So I would probably recommend that you go for 36 months just to give you a little bit more time in the event that you need to maneuver. Now, the other thing to really keep in mind is the milestones. Over the next course of the 18 to 24 months or even 36 months that we're discussing, what are the things that you need to achieve? What is going to allow you to move from one life cycle of your business to the next life cycle of the business? Is that going to be a certain amount of team members? Is that going to be a certain amount of revenue or engagement on the customers that you have coming to you? You need to be in very good clearance of what that looks like, what is your vision for that, and then what eventually needs to happen from having money perspective in order to really cover those costs to get you there. And then once you know that, then that's going to really help you in that regard. Now, the other area is the hiring. Obviously, you need to take a look as to who are the essential people that are going to help you in getting to the next life cycle of your business. So if you're at a, let's say, seed round, you're probably going to have the founding team in place. When you go from a seed to a Series A, you are actually going from just having the founding team to having more of an executive leadership team that is helping you with the execution. And you're going to have to get clear as to perhaps what's going to be their salaries, how you're going to be compensating that with maybe stock that you're giving them in the business. But ultimately, those are costs, and costs that you need to keep in mind when you're going out and you're looking to raise money. So then you need to think about the ask slide. When thinking about the ask slide, I always see entrepreneurs making the mistake of just putting a very specific amount. So if you're, for example, looking to raise 5 million, just to throw in a number, don't go specifically with 5 million. Go with a range. Maybe you can say 3 to 5 million. That way you can get all the people that are investing under 5 million and all the people that are investing 5 million. And you can even broaden that up and say 3 to 6 million. So that way you can get even the people that are investing a little bit above 5 million. That gives you a broader range of the people that you can tap into. And essentially this is going to be a strategy that maybe you want to pull out when you already have a lead investor. And that means someone that is coming in, pricing your round, putting the price tag so that everyone else comes and invests. This could be an open discussion that you have with some of these investors and so forth. Maybe just keep it as a range, and that way you're just not boxing yourself into one single amount. Because remember that investors, they have certain mandates with their own LPs, and this is limited partners, meaning people that have invested in their funds as investors. And those are promises and perhaps what I was saying, mandates that they've said that they're going to comply with. So if they're only investing up to certain amount or in certain rounds of financing, you want to make sure that you are also going in parallel with those mandates that they have with their own LPs. So when it comes down to positioning the ask, the way that you want to go about this is don't just think about the ask slide itself, because you need to think about the pitch deck as a whole. Remember, it's a flow, it's a structure, it's a certain story that you're walking the investor as they're reviewing. So it's just not the ask slide itself. You need to think about perhaps the financials, how you're breaking that down, what are the financial drivers and how you're positioning those on the pitch deck itself. You want to think as well about the market slide, where you are perhaps talking about who has raised at what other valuations, and that's going to give an idea to the investor as to, where you're positioned. Now, one thing that the investor likes to do is they like to ask you questions. They like to, for example, ask you around valuation, amount to raise. One thing that you could do so that you're not negotiating against yourself and maybe you can raise even more money at a better valuation is to do some market comps. And what that means is take a look at who are your competitors directly and indirectly, see how much they have raised and at what valuations. And when the investor comes to you and they try to get some of that critical info from you, you can say, look, basically in the market, we have company A, company C, company D, company, whatever that is. You show that range and you show the amounts and the evaluations that they have raised at. And you can say, we could be in between, and I think that we could do this much with this amount, this other much with this other amount, and this other much with that other amount. So that way you're giving all the relevant information so that they see where you actually fit, and then also what you can accomplish. Now, if they try to push you into the valuation, because obviously the amount that you're asking for is going to impact that, one thing that you can do is just to say, look, at the end of the day, I believe that in a valuation negotiation, there's one party that wins and another one that loses. So with that being said, I'm more interested in a partnership where everyone wins. And given what you are seeing here and all the different companies with all the amounts that they have raised and at the different valuations, where do you think we fit? And what do you think is fair so that we make this a super successful partnership where we both win? So just to wrap it up, there's a lot that goes into creating a super powerful pitch deck. It's just not about just putting 15 to 20 slides together, because every single thing that you say and that you do is going to make it or break it. Again, investors only allocate 2 minutes and 41 seconds per presentation. That's it. So you need to make it count and you need to make it be in a way which they can skim through it very quickly. You can actually take a look at the template that I have below that you can use for free. Founders are using it all over the world to raise millions. That way you don't need to start from scratch. So hit a like on this video and subscribe to the channel so that you don't miss out on all the videos that we're rolling out every week. Also, let me know in the comments how you're thinking about valuation, amount to raise, and so forth. And if you're raising money, shoot me a note at alejandro@pantheraadvisors.com. I would love to help out. Thank you so much for watching.